Forex trading is very simple, and I know there's at least one person starting their Forex journey who this video will help. Even if you know a bit about the market or a lot, there's still some gems in this video which will help you get to the next level. Before we get into trading strategies or psychology or how to actually learn Forex, we gotta start off with the basics. What is Forex? Forex is short for foreign exchange, and it's kind of like the stock market. But instead of buying shares in a company, you're trading the value of one currency against another currency. Think of it this way. You're trading one country's money for another country's money, hoping to make profit in the middle. Every time you travel abroad or make an international purchase, you're participating in the Forex market. The Forex market is incredibly important. It's like the heartbeat of global finance. So where governments, banks, individuals, businesses trade currencies in return for assets or investments or even tourism. And here's the thing as well, the Forex market is the biggest financial market in the world. We're talking trillions of dollars being traded each day. And the best thing about it is it's open 24/5. So if you become a trader or you are a trader, you can potentially be making money Monday, Tuesday, Wednesday, Thursday, Friday. So in a nutshell, Forex is basically understanding how currencies move and making strategies around that so you can enter in them trades and make profit in the process. I think that I like as well about Forex is it's accessible to everyone. You don't need to be a millionaire or be good at finance to get into Forex. You can have a small deposit of $100 and you'll still be able to make something. Maybe not millions or thousands and thousands, but you'll still be able to turn that $100 into something quite big. Now that we understand what Forex is on a general kind of level, we can dive deeper into other sections of Forex. We're going to start off with exchange rates. So you've probably heard of the term exchange rates, but what does it actually mean? So say you're about to go on holiday, and before you go, or even at the local destination you're about to go, you head to the exchange booth. The exchange rate is how much one currency is worth against another currency. Alright, so let's say you're traveling from the United States to Europe, and the exchange rate for the United States dollar to the euro is $1 equals 0.85 euro. That means for every $1 you exchange, you will get 0.85 euro back. Exchange rates are important because they determine the price for pretty much everything internationally, if that's goods or businesses or even just trade in general. So as traders, this is where we come in. The trade rate or exchange rate isn't fixed. It fluctuates all the time, minute after minute, hour after hour. The exchange rate is always fluctuating. This can be due to political impact or market sentiment. Anything that can impact the value of a country's currency will change the rate of the exchange. As a trader, we're going to try predict these fluctuations in the market and create strategies around it to gain profit from the fluctuations. Alright, so what is a currency pair? A currency pair is like the dynamic duo of Forex trading. It's two currencies that have been binded together and they're basically always in sync. So here's how it works. In every currency pair, one currency plays the lead role and the other currency plays the supporting role. We call the lead role the base and we call the supporting role the quote currency. For example, let's say we've got Euro USD. The Euro is like the star, that's the main character. The USD is what the Euro is up against. So next we got pips. What is pips? Think of pips like pixels, but of the Forex market. Just how pixels make up the resolution of your phone or screen, pips make up price movements in a Forex chart. Now let me break it down for you. The word pip stands for percentage in point, and it's a small price movement a currency pair can make. Alright, so picture this. You're watching a currency pair, let's say Euro USD, and it goes from 1.1000 to 1.1001. That's a 1 pip increase. So that 0.0001 is the pip increase. Pips are like your bread and butter in trading. When trading, you're essentially trying to predict how many pips a currency pair will go up or how many pips a currency pair will go down. Here's the thing though, the value of your pip is determined by your trade size. So the larger your trade size, the more value is in that pip and the more money you will make. So the more pips you capture, the more profit you make. But it goes the other way as well. If the market's going against you, then the more pips you lose, the more money you will end up losing. In a nutshell, pips are like the pixels of a Forex chart. Small, but when they come together, they create the bigger picture. Alright, so learning Forex. Let's talk about how to start your journey if you are a beginner. If you already know the Forex market or you've already been through that beginner stage, then you could potentially still use these resources, but it might not be necessary for you. Now, to be profitable in the Forex market, you're going to need a roadmap. And this roadmap starts with education. Education is going to be your greatest weapon in achieving profitability in the Forex market. Now, where do you begin? There's loads of online resources out there and loads of YouTube channels that you could watch and could study off. But for me, the standout one is babypips.com. Babypips offers a comprehensive and structured Forex learning program. It's like an online school for Forex, but without any hefty fees. And I mean like none, it's free. So you've got lessons on there, you've got forums if you want to speak to other beginner traders and other professional traders, or just get a point out there and you want some response back. But beside Baby Pips, you do have the YouTube channels and you do have the webinars and you do have other online Forex forums that you could use. But I would also recommend demo trading. You can trade live markets with not real money. So you don't have any real money at risk. You're not losing anything. You're just gaining experience. Trading is just like a big playground, and there's so much online resources nowadays that you can learn very quickly and very easily. Once you've learned the basics and you're ready to move on to the next stage, it's good to find a mentor, stick with that mentor, stick with that strategy, and just try to backtest as much as possible. If you find this video helpful so far, please drop a like, and if you do want to level up your Forex trading, then subscribe, because I've got a lot more Forex content coming out. The next thing I'm going to talk about though is Brokerage. These are the accounts and the people that you have your money with, and they will allow you to place trades. So the golden rule, always go with regulated brokers. Regulated brokers are safe as they have to stick to strict rules and strict regulations that are set by your country or your government. Make sure that you go with a broker that's trustworthy, transparent and accountable. Just remember, stay clear of unregulated brokers, because if they go under, so does all the money you put into it. Now, one of the most important, if not the most important section, trading psychology. Now, trading isn't just about numbers and charts, it's also about your emotions, and trust me, your emotions could be your best friends or your worst enemy. When you're trading the markets, you're not just battling with them, you're battling with yourself. There's things in your emotions such as greed, fear, overconfidence, and these things can make or break a Forex trader. Let's talk about discipline. If you can't become disciplined, or you're not already disciplined, it's going to be hard for you to be a good trader. And then there's risk management. We're not going into that section yet, but I want to talk about it in the psychology, because over risking and over leveraging can just lead to you blowing your account. I think the key to mastering your emotions is that losses are part of the game. It's just about staying calm, letting your strategy play out, and letting the numbers and probabilities play out. So just remember, whether you're on a winning streak or you're on a minor setback, trading psychology is one of the biggest things in Forex. It can take a novice to a professional trader like that. Now onto the most crucial section, risk management. In Forex, risk management is very important. It can amplify your gains, but it can also magnify your losses. So it's good to find a middle ground. Now the first step to having good risk management is setting a good risk tolerance. Whether that be you risking 1 to 2%, or maybe you have a smaller account and you have a good strategy. Maybe you can risk 5 to 6% per trade. Just risk an amount that you're okay with losing, and an amount that you can go sleep without losing any. Next, use stop losses. Think of stop losses as bodyguards. They will cut your loss instantly if the market goes against you. The most important thing, like I mentioned earlier, is don't put all your eggs into one basket. Risk little by little each trade. You're not going to win every single trade. You will lose some trades. No matter what strategy you have, it's never going to be a 100% win rate strategy. So just diversify, put a little amount of risk, and just let the probabilities of your strategy play out. Remember that trading isn't a sprint, it's a marathon, and you want to be in the game for as long as possible, making profit for as long as possible. There's so much knowledge out there on the market, and I feel like I've given you a nice base to get you started or get you to that next level. It's time for you to just use the knowledge that I've given you, practice, get in the market, learn, trade, and soon you'll be profitable, or you'll be more profitable, or whatever you want to achieve by watching this video. Thanks for watching this video though. Please don't forget to like and subscribe, and I'll see you in the next one.